While trend indicators can tell us the direction of a trend, momentum indicators tell us whether that trend is losing or gaining steam. This helps traders analyze if it's more likely to continue or reverse in the near future. The Moving Average Convergence Divergence Indicator, or MACD for short, measures the momentum of a trend using exponential moving averages, or EMAs, a trend indicator covered in our last lesson. For this reason, the MACD can also be used to measure trend. And as a lower indicator, it has its own chart below the stock chart. To add it in WebBroker, navigate to the Charts page by going to Research, Charts, then entering the name or symbol of a stock. Under Lower Indicators, select MACD from the drop-down menu. The MACD consists of four main elements: the MACD line, the signal line, the zero line, and the histogram. The MACD line is calculated using the difference between the stock's 26-day and 12-day exponential moving averages. The signal line is a 9-day exponential moving average of the MACD line. These are the standard settings, but you may also adjust these as you like in the top left-hand corner of the indicator chart. When the MACD line crosses over the signal line, it means that the uptrend is gaining momentum, giving traders a buy signal. The zero line is a baseline that divides the chart into a positive and negative area, or to put it simply, bullish and bearish. Some traders wait for a second signal to buy, when the MACD line also crosses over the zero line into the positive area of the chart. The same is true in the other direction. When the MACD line crosses below the signal line and below the zero line, it means that the downtrend is strengthening, giving traders a sell signal. The histogram gives traders another way to visualize this information. The bars are green and above the zero line when the MACD line has crossed over the signal line. They're red and below the zero line when the MACD line has crossed under the signal line. The taller the bars, the wider the divergence between the two exponential moving averages. In other words, tall green bars indicate a strong uptrend, giving traders a buy signal, and tall red bars indicate a strong downtrend, giving traders a sell signal. Another momentum indicator you can use is the Relative Strength Index, or RSI for short. Click Lower Indicators, then Relative Strength Index to add an RSI chart below your stock chart. You can adjust the time period in the left-hand corner of the RSI chart. The RSI chart consists of a range between 0 and 100 and a line oscillating within it that measures the stock's momentum based on its closing prices. When the line crosses below and into the 0 to 30 range, it's a warning sign that an oversold condition may be developing and that the stock may reverse direction and start trending up soon. This is not a buy signal yet. When the line crosses back up and above the 30 mark, that's when a buy signal is generated. On the flip side, when the line crosses above and into the 70 to 100 range, it's a warning sign that an overbought condition may be developing and that the stock may reverse direction and start trending down soon. When the line crosses back down and below the 70 mark, a sell signal is generated. The final momentum indicator we'll take you through is called Stochastics. You'll also find it in the Lower Indicators drop-down menu. Like the RSI, the Stochastics chart shows a range between 0 and 100. However, there are two lines oscillating here instead of one, the percentage K and the percentage D lines. While the RSI measures overbought and oversold conditions using closing prices, the percentage K line also factors in the highs and lows. The percentage D line is a 3-day simple moving average of the percentage K line. Traders should watch for when the lines approach the 20 and 80 marks, warning signs that an oversold or overbought condition may be developing. A buy signal is generated if three things happen within 5 days. 1. Both lines fall below the 20 mark. 2. Both lines rise above the 20 mark. And 3. The percentage K line crosses above the percentage D line. A sell signal is generated if the reverse happens within 5 days. 1. Both lines rise above the 80 mark. 2. Both lines fall below the 80 mark. And 3. The percentage K line crosses below the percentage D line. Stochastics, RSI, and the MACD are also known as oscillator indicators, or oscillators, because they present as charts with values oscillating within a range. Now, let's say you applied a simple moving average to your chart, and it's telling you that there's a strong uptrend. How do you know whether to buy or sell? When using technical analysis, no indicator should be used in isolation to base trading decisions. We use multiple indicators to confirm the signals we're seeing. In this case, it can help to observe one of the oscillators alongside the simple moving average. For example, if the trend is up, but the stochastics indicator is reading that the stock is overbought, it means it may reverse direction soon, telling you it could be wiser to sell. Learn more about oscillators by going to Research, Markets, Technicals, Education, and then Oscillators. And there you have it. Your technical analysis toolbox now contains 4 new elements: candlestick charts, patterns, trends, and indicators. Stay tuned for our next video where we'll show you how to research trade ideas based on technical analysis in WebBroker. And if you're interested in learning about other approaches, check out our course, Intro to Fundamental Analysis. For even more information, check out our upcoming webinars and live masterclasses on technical analysis.